Let's jump right in. Right now, a massive tectonic shift is violently reshaping the Indian IT sector. We're literally watching a classic David versus Goliath story play out in real time, and there are billions of dollars on the line. I mean, for decades, a few massive titans held a total monopoly on global digital transformation. You had these legacy behemoths scooping up massive contracts without even breaking a sweat. But today, a fleet of hyper-agile disruptors is completely flipping the script. So we're going to unpack the hard data, the rapidly shifting market sentiment, and the aggressive corporate strategies that are suddenly redefining this huge multi-billion-dollar industry. Let's talk about the slowdown. For years, the Big Four, TCS, Infosys, Wipro, and HCLTech were essentially untouchable, right? They were the undisputed heavyweight champions of the tech world. If a global enterprise needed to overhaul its tech stack, these were the absolute default, risk-free options. But look at the financial tickers today. The tide hasn't just turned, it's crashing. These legacy giants, the ones we thought had absolutely limitless upward trajectories, have slammed into a very real, very hard growth ceiling. Revenue projections are shrinking, and you better believe the market is noticing. Which leads us to the ultimate question we need to answer in this explainer. Are these once untouchable titans actually in trouble? Okay, let's dive into this. To really grasp the magnitude of what's happening here, you have to look at their structural reality. These companies have built sprawling global empires over the last 30 years. But as history constantly shows us, massive empires come with massive bureaucracy, we're talking incredibly heavy overhead, and frankly, enough corporate inertia to make a dial-up modem look fast. They are built for scale, guys, not for speed. Think of the legacy giants as massive, heavily loaded cargo ships. They possess immense power, sure, and they carry an unbelievable amount of weight. But if global market conditions change, it takes them miles just to pivot a few degrees. They literally cannot turn quickly. Meanwhile, the midcaps, companies like Persistent Systems, LTIMindtree, and Coforge, they're the fast motorboats. They are hyper-agile. They're built to change direction on a dime. And right now, they are speeding right past those massive cargo ships, completely outmaneuvering them at every single turn. So what exactly is dropping the anchor on these massive ships? Well, it's a classic corporate bind. First up, they're facing deeply sluggish demand in their absolute cash cow markets, the US and Europe. Enterprise clients are suddenly, terrified of signing sprawling, multi-year mega contracts. I mean, nobody wants to commit $100 million over 5 years in a volatile economy. Makes sense, right? Second, it's the headcount. When you employ hundreds of thousands of people, even a slight dip in client demand instantly turns an enormous global payroll from your biggest asset into a massive financial anchor. And the result of that massive bind? Low single digits. The growth rate for these legacy giants has absolutely plummeted. And look, in the hyper-competitive, fast-moving tech world, single-digit growth isn't just a temporary slowdown. It's a blaring siren. For investors watching the market, it's a glaring red flag. It heavily signals that the old playbook, throwing tens of thousands of generalist engineers at a single monolithic contract and just hoping for the best, is officially broken. The market is demanding a completely different approach now. Now, what's really interesting about this slide is the undeniable reality behind the numbers. It's the incredible contrast. While the mega giants are stalling out in the single digits, the agile midcaps are reporting surging double-digit growth. We are talking about explosive upward momentum, and it's happening right in the teeth of the exact same macroeconomic headwinds the giants claim are holding them back. It's the exact same global market, the exact same global economy, but the financial outcomes? Totally inverted. So how are they pulling this off? They are swooping in and swallowing up the mid-sized deals. For years, the massive legacy giants totally ignored these contracts. They basically deemed them too small to move the needle when you're generating tens of billions in revenue. But the mid-caps, they recognize a massive untapped goldmine sitting right in the middle of the market. And they're proving definitively that you don't need billion-dollar mega deals to scale rapidly. You just need to be fast, highly efficient, and hungry enough to eat what the giants leave behind. But it's not just the size of the contract. It's a fundamental, seismic shift in strategy. It really all comes down to specialization, offering deep, targeted expertise at a faster pace, instead of just acting as a traditional jack-of-all-trades. These midcaps aren't trying to be everything to everyone anymore. The era of the generalist IT service is dying. Instead, they offer laser-focused expertise delivered at breakneck speed. Why? Because modern enterprise clients have completely evolved. They don't want a slow-moving generalist figuring things out on the fly. They want a hyper specialist who can execute incredibly complex solutions like yesterday. Just look at the specific battlegrounds these disruptors are dominating. They're aggressively carving out highly lucrative, highly complex niches. We're talking about dominating AI native product engineering, building intricate critical banking software, locking down highly sensitive, zero-trust cybersecurity infrastructure, and running specialized cloud operations. By focusing so intensely on these high-complexity sectors, they become the absolute best in the room. And that unparalleled expertise, that's what makes them the undeniable first choice for modern tech executives. So the crucial point is, this drastic shift in revenue and strategy triggers an even more vicious conflict behind the scenes, the talent war. You simply cannot build cutting-edge artificial intelligence architectures or secure global banking platforms without the absolute best engineering minds on the planet. The human capital is the entire engine here. And right now, the battle lines for acquiring that top-tier talent have been entirely redrawn across the global industry. The hiring landscape today is honestly a tale of two absolute extremes. Burdened by slow growth and massive overhead, the IT giants are actively freezing fresh hiring. Some are even going as far as delaying the onboarding of candidates who have already signed offers. It's crazy. Meanwhile, the mid-caps are in a state of hyper-aggressive expansion. They're hiring rapidly and offering massive salary hikes to poach the best people. And look, top talent is smart. They follow the momentum. Right now, the sharpest engineers in the world are sprinting away from the stagnant legacy giants to join the disruptors. And this brilliantly illustrates the final, undeniable outcome of all these forces colliding. The revenue growth gap in the sector is just staggering. You've got the large caps completely stalled, weighed down by their own massive scale and slow reaction times. But the mid-caps, on the other hand, are seeing explosive, towering financial momentum. Institutional investors are doing the exact same math we are right now. They're analyzing this data, and they are overwhelmingly pulling their chips from the legacy giants to bet big on these agile, specialized disruptors. Which brings us to the stark reality of the tech landscape as we push deep into 2026. The mid-caps are no longer just trailing in the wake of the massive cargo ships. They aren't just surviving, and they certainly aren't just following the leaders anymore. Through sheer agility, hyper-specialized innovation, and incredibly aggressive talent poaching, the mid-caps are now actively leading the race. They are setting the pace, dictating the new industry standards, and showing the global market exactly what the future of tech looks like.
The era of easy, unchallenged dominance for the Big Four is definitively over. Now, to be fair, their massive global scale means they certainly won't disappear overnight. They still hold billions in legacy contracts. But the fundamental blueprint for survival and for hypergrowth in tech has completely changed. The fast motorboats have officially rewritten the rules of engagement. Which leaves us with a powerful, provocative thought as this massive global market continues to violently evolve. Are India's IT giants losing their dominance?